a good day.
Today is a good day indeed, Daniel. Good morning, everyone. Hopefully we are online. I'm going to play around with two screens so I can see if we're live. Are we live? Am I seeing myself live? It says here that we're live. Let's see. I'm going to refresh and
Hi.
double check.
Yep. I'm seeing us live right now.
I see what you're seeing. All right. Cool. We're live. I'm excited because you're my first guest.
Well, I'm excited
So,
to be on here. I appreciate it.
hey. All right.
It's gonna be a
So
good
for
time.
those, yes, it's going to be a good time because I get to talk to you a lot about home insurance, and now people get to know what we're going to talk about.
Let's do
So
it.
for those of you that have not met Daniel or have met him only on the phone, Daniel is an account executive with Goosehead Insurance here in DFW. He has helped a numerous amount of my clients get home insurance whenever they are buying a home. And I thought I'd invite him on today to talk to you and also give me a few pointers that I may not know yet about home insurance. And what is needed, because that's a whole topic that I sit usually with my buyers and explain. And if you have bought a home before with a mortgage, you know that home insurance is required with your loan, and it is part of your mortgage payment. So you have to consider that from a cost perspective and from the fact that you have what coverage do you have. And then even if you are a cash buyer or you've paid your home off, you will want to consider a home insurance even if it's not required. So I thought I'd get Daniel on today and talk to us about home insurance, and especially that I talk to my buyers about home insurance, and then I also talk to them about home warranty, which is not required. And most people go, wait a minute, what? Home insurance, home warranty, what does each one cover? So Daniel, can you maybe start with that? You know a lot about home insurance, so maybe you can tell us what it is not when it comes to home warranty and what home insurance really covers.
Yeah. So I mean, I've gotten the question asked a lot of times as far as, hey, isn't this kind of the same as a warranty? And it's very few that say it, but ultimately my response is always the same. A warranty is more of taking care of something that's going to be expected, the aging or breakdown of appliance or system, whereas it's not going to cover the actual house, it's not going to cover the contents, and that's where the actual insurance will take effect. It's things that are unexpected events is where this will usually take effect, like a wind hailstorm, lightning, fire, things like that. But it's also going to ultimately cover the structure of the house, again, the contents. But in the event of a lawsuit, that's where your liability protection kicks in, and that's going to be the biggest difference with an actual home insurance. I mean, if we get into condos and renters and mobile homes, there's so many different things that will go into each particular policy that some may cover that, some may not. But ultimately, that insurance is to help with those unexpected events. More particularly things that you can't foresee happening in the future.
Okay, that makes sense. And I guess, like with most insurances, we wouldn't say, okay, I've got a house. These are the features of the house. These are the upgrades in the house. This is what the house cost.
Mm-hmm.
I'm just going to get a home insurance from anybody. I mean, obviously, I would assume that they're not all created equal. But in what way would you say home insurance isn't all created equal?
I mean, the biggest thing about an insurance policy is ultimately people don't know what is covered, what's not covered. They kind of go off of what's on the actual physical piece of paper, your declarations page. But what they don't see is what's in the policy packet, the actual verbiage of a policy. So are all policies created equally? No, because one, every situation will be different. Every person will want different things. But also the biggest factor is what people don't know are the two types of policies that can be written. There's what's called an all risk policy, but there's also what's called a named risk policy. And the biggest difference between these two are a named risk will cover up to a certain amount of perils, whereas an all risk is more what's considered an open risk policy. Things that are covered a lot more, a lot of freak accidents, pretty much covers you for everything outside of a couple of exclusions. And the only way that the consumer, the client, will know about this is not off the declarations page, but the actual agent that they have addressing this type of information. Because if it's not addressed to the client, what's going to happen ultimately is they're going to find out the hard way, like my parents did, unfortunately, a few years back. They found out the hard way that they didn't have certain particular coverages because the agent never went over it with them. Ended up costing them, quite a bit of money out of pockets. And, that's when they came to me and, wanted me to take a look at their policies going forward when they moved to Georgia, just to make sure that they don't have that happen again. But the other thing is, with the policy itself, other things that factor into it would be replacement cost on the roof and your contents, along with either also being covered at actual cash value. And so usually, again, it's up to the actual agent to specify, hey, this is what you have for your roof and the contents, because no one wants the actual cash value. It's basically depreciation taken into effect, just like a vehicle being driven off the lots, it loses value right then and there. So does the overall roof, and so does your contents. And so that's going to cost you a little bit more money out of pockets than if you have full replacements. But again, it goes back to every person, every situation will be different. As far as like new builds, that policy might be a lot different looking than a 1940 build in a sense, as far as, what people want covered, and what's most important to them.
Okay, so to your point then, there are definitely different items to look out for when we're talking about coverage. To somebody who hasn't done it, and maybe this is their first time to buy a house, would you say what are the main things to be looking at? Or do you get the information about the home and say you see, okay, they're buying a 1975 built home? Do you ask them questions about it? Or they're buying something that's only 5 years old, and then you kind of give them recommendations on what coverage items to really focus on? How does that work? Because they may not know. They may go, I want my house covered so that if problem happens, I'm covered, and they don't really know all the details and ins and outs of it.
Okay, and I mean, ultimately, when it comes to that quoting aspect, I mean, yeah, we'll take a look, or I'll take a look at the overall year builds. And I mean, compared to, like, let's say I'm working on a 2016 build right now, I'm not going to ask, hey, has that plumbing been updated, HVAC, water heater, electrical, because chances are, that's how it was built. But if we're looking at a 1970 builds, then back then carriers or homes being built used to use knob and tube. The plumbing used to be a little bit different, and so my quoting aspect is going to be the same new build versus a 1975 build. As far as I'll still give people everything, but ultimately with that 1975 build, I'm going to explain in a lot greater details why I recommend certain coverages more so than not, because of that age of the home, compared to I'll still offer the same coverages to that 2016 builds, but I'll let them decide if that's going to be of importance to them. To me, it's important just to be on the safe side, because you never know. But especially if there's a warranty in place with that builder, they may not need a certain coverage that someone with a 75 build would. So that's a huge factor into how quotes can work, because ultimately you don't want to buy a home and within a matter of months you've got a plumbing related issue. You want the insurance to take care of it. That's why you're paying for it. So that's one of the biggest things that I look for when evaluating a policy is, what type of water coverages can we add? Can we add replacement cost on the home itself, on the contents, on the roof? But also another big factor would be your deductible. Because your deductible is that shared risk with the actual insurance carrier, that if a claim doesn't exceed that deductible that you have, then you're on the hook until it exceeds that deductible. And then that's when the insurance carrier would take effect and cut you a claims check. And so usually, it's very standard in Texas, 1% deductibles across the board, especially on that wind hail side. But some people want to go a little bit lower. It's easier to come out with maybe $1,000 out of pocket than maybe 2,000. Or some people may want to go up to a 2% deductible. Come up with $8,000 for them, or they've got the funds. So those are a couple of things that we'll look into when evaluating an overall policy. Is okay, what type of client are we dealing with? What type of home are we insuring? Here's what I'll recommend, but let's have them customize it to see how they fit their needs.
Right. And I know that sometimes, depending on the situation, you have to stay within either you have to stay within a certain payment, mortgage payment as a whole, because of your debt to income ratio that you have to kind of uphold, or you want to stick to a certain payment just because looking at your overall budget. So then they can also, work with you on, okay, if I remove this, but I put that in because this is more important to me, this will get my payment to the number that I need it to be, right?
Correct.
What other things make a difference in a quote? So like recently we had a situation where the fact that the roof was renewed less than 2 years ago made a difference in what the quote was on a pre-owned home. The home wasn't 2 years old. So, but there was something renewed. You mentioned that you would ask certain questions on a maybe pre-owned home that's been around for a while. What things have been updated? So, what would you say in terms of the home or the sellers or the buyers make a difference in a quote? Because I do also know sometimes that buyers will go, why are they asking me this particular question? What does it matter?
Yeah. And so, I mean, it's funny you mentioned that. So with the 2016 bill that I'm working on now, I still ask the same question, the roof. Chances are the roof didn't get replaced, which, I mean, it's a 4-year-old house, 4-year-old roof. So, I mean, the likelihood is very slim to none, but that roof does make a difference, because especially in DFW, wind hail is like one of the biggest claims filed. And that's why carriers are, ultimately, some are changing their deductibles to 2% because of that high claims volume. So the newer the roof can definitely save you a few $100s compared to if it was 10 or 15 years old. Because the way the carrier is looking at it is the newer the roof, the less likelihood that they have to replace it within a couple years. Now, when it comes to roofs, maybe 15 years and older, that's when you get a little bit into a more of a trickier situation, because some carriers don't want to take anything on over 15 years because they know they're going to have to replace it sometime soon. That's a claims check that they'll pay. Some carriers will cover it, but they'll cover it at actual cash value. So, I mean, that roof will play a huge factor in saving a few hundred, or potentially either, having to pay a little bit more on a premium with a carrier that will insure it, or taking depreciation and having actual cash value for it.
Okay. So when you, the roof being an example, are there other things that don't have anything to do with the house that might make a difference in the quote?
So one of them could be the overall insurance score. I call it insurance score because ultimately that's what the carrier is looking at. They're looking at prior claims history. They're looking at payment history with the carrier, but also credit does get factored into it during that insurance score altogether, because when quotes are getting ran, usually the better the credit gets rolled out with quotes altogether. Some carriers factor that in. Some carriers don't really factor it in. So every situation will be a little bit different. But let's say two spouses are buying a home. They're both on the loan itself. Well, the way we'll do it is we'll run quotes in both spouses' names, because sometimes one spouse could come back a lot better with that carrier than the other spouse. Whereas one carrier, both spouses might have the same premium, because it's not really a factor altogether. So that's something that could factor it into it. But the best thing is, the insurance score, when it gets ran, people ask, hey, is this gonna, I don't want my credit ran because it's going to, I don't want anything happening on the mortgage.
Mm-hmm.
And so I know, going through the process myself, I was always told, hey, your insurance score never pulled in on your credit. Like, that's how small the hit it is, because it's looking at all these other factors that are really on the insurance side. So,
Right.
that insurance credit score could definitely factor it. Another one is previous claims. Um, you know, Depending on the actual claim itself, like, if it's what they call an act of God, natural disaster like a wind hailstorm, well, those are things that are out of your control, which usually aren't going to impact your overall quote itself. Now, I mean, the more you have, then that might factor it in. But if it's something that can't be avoidable, a carrier really won't penalize you, compared to if it's a appliance-related water loss, if it's a fire liability, things that can kind of be controlled and be stopped. Those usually will have a negative impact and increase your overall premium, which also claims will follow you around for about 5 years. And so that's one of the big factors that, if you have a water related loss that, let's say the carrier is rating negatively against you, your premium could go $1,600 to now $2,400, just because of one. So you're going to be paying for it on the back end. And so fully being aware of the policy will also make you aware of, if is this worth it? Is this not? So it kind of gives you an idea of, hey, I'd rather pay this out of pocket, so I'm not, paying that $800 increase. So, but
Mm-hmm.
it goes back to, every person will be different in every situation. So, sometimes you have to file it, sometimes maybe you don't have to, but that will definitely factor the previous claims.
So I'm
Also,
sorry to interrupt you.
oh
When
yeah.
you say previous claims, so you're buying this house. Are
Mhm.
you talking about previous claims that you had on a previous home that you owned? Or are you talking about previous claims on that house that now the seller has made on the house?
So it's just previous claims on yourself. So
On yourself.
when,
Okay, makes
yeah,
sense.
and so when we run a clue report,
Mhm.
ultimately it'll come back one of two ways if claims filed. It'll either come back as what's called risk, which is usually a claim that's filed on the home. A lot of times you'll see this for a new home buyer. You'll see like a risk claim. A lot of times it's maybe hail or water damage, but that's not going to impact the quote as if it pulled in as a subject related claim, which is now directly for that
Mhm.
client itself. And that's going to have more of an impact than the previous owner, because they didn't have ownership of that home. But also, I think you mentioned something about like renters insurance having it. I
I
think you
was going to
asked about that.
say, if you haven't owned a home
Mhm.
previously, but you were a renter, it's your first time home, and you've had renters insurance, I think you had mentioned that may have an impact as well. So claims on that would also come into play.
Yeah, so it's basically, because it's a homeowner's policy, even it might be a different policy form on the renter side, that's still going to follow you around, for however long the carrier requires it to, usually 5 years. So that is something that will pop up. A lot of times you'll only use the renter's claim aspect in the event
Mhm.
of someone steals, maybe personal items out of your vehicle.
Right.
Somehow maybe there's a water loss in the place that you're renting from, and it's damaging your contents.
Hmm.
So, you don't really see a whole lot of renters claims that much, but the theft, the water related loss of the contents is usually, where it could get you filed.
Gotcha. Okay, that makes sense. Um, Although it's sometimes very frustrating to people if they've had a claim living in an apartment that's now,
Hmm.
following them. But it's good to know that these things are happening
Hmm.
because I get a lot of questions, and sometimes, you know, it doesn't happen often, but every now and then you'll have a house that you looked into and done some due diligence, and for whatever reason that buyer has opted out.
Yeah.
And you have a new buyer and they fall in love with the same house, or you have another buyer that you showed that same house, they fall in love and they go in, and all of a sudden I've been in a situation where I've seen two different quotes on the same house, and people
Yeah.
just don't understand that they are a part of that picture,
Yeah.
not just the item that is being insured. And
Oh,
so
yeah.
that's really interesting, because I think people think about it. I mean, yeah, car insurance, they think about, okay, my driving record, I'm the driver and the car, but they don't always think about that when they're talking about insuring a home. So your renter's insurance claims, if you've had a theft or car broken into or things like that, your credit may have an impact. If you have previous claims on a home that you've owned previously, I know that it's smart to maybe go get somebody to look at it, unless it's like the house burnt down. But if you have something, you know, a water leak that you can control, and get somebody out to give you a quote, maybe give you a call, Daniel, and see if this is going to be something. I mean, to me, I always tell them, if it's below your minimum, you're not going to get paid anyway. And now there's a claim in place that the insurance company logged in. Even if they're not paying out, they know there was something with the house. So get a quote, find out what it's going to cost. Is it worth even picking up that phone? And I know that you've recommended they call you first before calling the insurance company, right?
Oh yeah, I was about to say, have you and I had the conversation? Because that's exactly what I tell people that. Well, really quick, going back to the same house, but maybe two different people, where are all insurance policies created equally. You know, a lot of times people might say, hey, well, I'm my friend down the street, or my friend who's got a smaller house than me in a different zip code is paying less. Why am I paying that much more? And it goes back to every situation, every person is going to be different. So that's why all policies are not created equally, because of those factors. But to answer your question, yeah, I mean, everything that you just said, it sounds like we've definitely had that conversation where I always say, call me or call my back office support, because ultimately, when you do call the carrier, like you said, a claim's most likely going to be filed, and that can follow you around for the next 5 or so years. But by talking to someone like me or my back office, who's not the actual carrier, but we're licensed that we can talk about your coverages, your policy, all that good stuff, it assures the client, the home buyer, that okay, hey, I could talk to someone about my policy that knows what I'm covered for, and if it makes sense, awesome, them and I will file it together. But ultimately, if it doesn't, well, carrier never knew we had the conversation, and that's not going to be impacted into my quote, depending on what the type of claim is. And that's a thing that can make a difference in a quote itself. Like I always tell people, and I had the conversation this morning with someone that they're looking at getting the roof replaced down in Katy, and they just haven't had an estimated cost for repairs. Like there's no leaking. They think the roof's in good condition still. And so the first thing and only thing I've said was, have you had someone come out and inspect it? So once they say no, then ultimately I'm telling people, okay, if you could get someone out there to inspect the damage, if you could stop and minimize any further damage from happening until you get that cost for repairs, then here's what your deductible is. Call me back. We can talk about it in further greater details to see, okay, here's your cost for repairs. Here's what your deductible is. Okay, you as the insured, is this going to financially make sense for you? And if it does, perfect. We'll file it under that carrier. But if it doesn't, well, it's not going to impact the quote, because the carrier never knew we had the conversation, because you're only talking to me. So yeah, it definitely sounds like you and I have talked about this before.
Yes, you have taught me well. You've taught me well. This is why obviously working together and working with people that over and over, it definitely makes that conversation easier, because we, by osmosis, start picking things up and can kind of prepare our clients, especially the ones that are new to the process, because there is so much to do when you're purchasing a home. Most people think about it and go, okay, I found the house. We put an offer. It's accepted. Great. And I do tell them, hey, for now, tonight, go celebrate that you found one and you're officially under contract.
Yeah.
Tomorrow, we've got work to do. Work. You're going to have a flurry of emails and documents and stuff. It's okay. It's all part of the process, but most people don't think about that part. And so one of the first things I remind them is there are all these other pieces that we have to put in place. Most of us think about, okay, home inspection, make sure this house is good, because maybe we've opted in for an option period and we need to make a final decision. I hope there's nothing wrong with the house. When is the best time, in your opinion, to get a home insurance quote? Because they're like, well, we don't even know that we're going to get the house. We still need to look into it. What would you say about that?
I always recommend the option period, and just because at that point, what is it, usually 10 days or so, the option period, or is it 7?
It varies. It really varies. We could be aggressive if we need to be. It all depends on structuring the offer and what's going to be most enticing. 10 days is not unheard of. 7 days is, I would say, probably average. 5 days is when you really want to sweeten the pot, make sure that, hey, we're not going to hold you up. But yeah, somewhere between 5 to 10 days.
Okay. And the reason I personally recommend the option period is because at that point, once I go through my discovery call with the client, get the info I need, and start running, insurance, where, put all my carriers to compete against each other, I'm also running a clue report, which again goes back to, I'm able to see if there's any claims filed on the home itself by the prior owner. And so at that point, if something maybe stands out, like a fire loss for $90,000, well, I want to at least make sure that the buyer is fully aware. Hey, do you know anything about this fire loss? It's $90,000, happened 2 years ago, or this water-related issue. So then at that point, during that option period of time, once I go over that with the client, and if they say, oh yeah, no, I'm fully aware, they got everything updated, repaired, all that stuff, then awesome, we're moving on to the next thing. But sometimes every now and then the client may not know. And so by me telling them about that clue report in that option period, it allows them to go back to you as their agent. And what is it? Y'all are able to work something into the contract that you want to find out more about it. You want to make sure what happened, what was damaged, was repaired, so that way your client, my insured, is not going into that home blindsided by something that should have been taken care of, but now they're on the hook for it because now they own the house. So that's why I do recommend that option period.
So kind of going back to what you mentioned a little bit ago about when people call the insurance company about something that happened to their home, and for whatever reason, they're not going to fully proceed with the claim, or, oh, it's below their deductible, so now they're going to pay out of pocket. So now the insurance company's out of it. It's still there. And when you pull your clue report, you can see it, but there's no trail, right? So they're say, oh, hey guys, we had a water leak in our house. Our ceiling has a hole, a piece in it, and it's gonna blah, blah, blah cost whatever, and it's below your limit. So now off goes the seller. The insurance company doesn't know what happened with it. And a buyer will find that out from your clue report and can then go, so apparently you had a water leak, especially if it's not on the seller's disclosure.
Oh, yeah.
Right. Because sometimes, in all honesty, we try to explain to sellers how important the seller's disclosure is. We have our own limitations on what we're allowed, how much advice we're allowed to give on a seller's disclosure. We try to tell them, you know, put everything down, but sellers sometimes go, why fix that? It's no longer an issue. I mean, it's done. It's a done deal. Maybe they even replaced every little piece of it, so it's newer than the rest of the house. And they don't even think about it, and they never filed officially a claim. But here you are telling the buyer, well, there was a claim. We don't know anything about it, and the buyer can come back and ask. But it's information, right? That's our job, is to provide as much information as possible. So all that would be kind of your clue report, gives us a clue on what's happening with the house.
Yeah, and so I mean, it goes back to what you're saying. I mean, there's only so much information that we see on the clue report that, you know, the first thing that some people usually ask for, like if I say, hey, do you know about this water loss is $20,000? They're like, no. Do you know what it's for? And unfortunately, you know, I wish we had more information to tell them, but that's when I usually tell them, hey, you know, go back to your agent to reach out to the seller's agents, and that way y'all could figure it out. You know, I'm not trying to scare you or anything, but just want to make sure you are aware if they haven't disclosed it, so you're not going into something where now you're on the hook a few months later for something that should have been taken care of. So it's just doing the due diligence to make sure that, especially if it's a young home buyer, first time home buyer, like a young couple, things like that. Maybe it's an older person with, you know, limited income, things of those natures. You know, we want to make sure that they're aware, so now they're not depleting their savings because now they're on the hook.
Right. Did I lose you?
I
lost your camera. I can still hear you.
Oh, I don't know.
Let me bring you back.
What happened with that?
Hold on. There you are. You're back.
Oh, whoops.
You back now?
Yes. Yeah. Sorry.
Yeah, we're still live, so it's all good. It's all good. Hey, it's technology, folks. I'm going to take a moment to tell you, I don't know if you can see, but some of your clients are actually online as well. Alicia Connolly is saying hi. And I'm going to stop real quick before we go to the next question and answer a question. What about new home builds? I know we touched on that just a little bit at the start of our call. So somebody's asking about new home builds.
Yeah, I actually tried to reply back while we're talking, but
okay.
The video keeps popping up, and that's why you keep hearing us talking again in the background. So.
Gotcha. So we touched a little bit that new home builders have varying different policies when it comes to warranty. So when you, just to repeat what kind of a little bit of what you said at the start of the call, you don't always know that. The buyer may come to you with the warranty information, but the carrier, they don't like chip at everything perfectly. So, but you are able then to advise them what's covered by the builder, what makes sense to have double coverage on, what is not covered, what does that really mean? Can you touch on that just really quickly, just so we can answer that question?
Yeah, so when it comes to new builds, I mean, I do see that, you know, maybe it's a Dave Perry 2020 builds. They'll have a, you know, let's say a 10-year foundation warranty. You know, ultimately, since that's not my overall area of expertise, I don't know exactly what goes into a builder's warranty for something like that. That's, you know, even if someone were to send it to me, it's probably gibberish in a sense. And so I'll still go the same route as if there wasn't a warranty in place from that builder, as to, I'm going to assume the builder's not covering this. So this is why I'm recommending, you know, having this on here. However, if you feel differently, you know, then that's when I'll leave it up to the client, the insured, to basically say, like, if they know the builder's going to cover, let's say, a slab leak due to a plumbing related issue that insurance would cover as well, chances are, you know, sometimes people may not want it because they've gotten this free home warranty that is going to cover the same exact thing. And so, I mean, I'll leave it up to them, but just because I'm not too familiar with it, I'll still quote it, explain why. But again, it goes back to letting them customize it, that if they don't want it, then, ultimately that's up to them. But I just want them to know, hey, this is why, because I don't know if it's the same thing, but we can take it off if that's more comfortable for you.
Okay.
So it's very different.
It's important to ask a lot of those questions, and it's also going to be very different. Every home builder is going to be different, and the amount of information a home builder will tell you up front and how much you can basically decipher what's written in the documents is going to make a difference, because you're not the owner of that policy. Your carrier isn't the owner. They're not locking in together, right? That's one entity saying we promise to do this, and then the questions, because I end up, being the middleman going, okay, find out for us, what can we do? And you're trying to decipher, well, to what degree, how much is covered, what are the maximums, things like that. What are things that could be play factor that would void that warranty or make you not get covered, and then you have to answer to the carrier that you're helping insure with. So there are two separate pieces of insurance, of warranties, of guarantees that the buyer, the new homeowner has, but they don't necessarily talk to one another. They don't say, okay, you're going to cover this and I'm going to cover that. They're two separate things. And you have to know. Now, say somebody insured their home and halfway through, 6 months in, 4 months in, whatever, it's all sunk in. They've had time to regurgitate it all and make sure they understood it better, and they wanted to make a change. How easy is it to do that? And how long, your policies typically for how long when the renewal will change, that kind of thing?
Yeah, I mean, ultimately, depending on the type of change that they're wanting to make, like if they want to maybe increase a particular coverage, if they want to maybe add something or take something away that, they now thought about it, like you said, they kind of regurgitated and had the time to think about it. And because, I mean, you want to celebrate once you buy a house. You're not thinking, hey, I got to add this, and this, or, remove this. So ultimately, every carrier will be different on when you can make the change, whether it's midterm or you have to do it, come renewal time. Like the biggest one is really more your deductible. Some carriers allow you to change your deductible midterm. Other carriers won't allow it. So it's always a case-by-case basis that I always tell my clients, like, hey, just the FYI, we could look into making these changes after closing, but if the carrier is not going to allow us to, you just have to write it out for, for the year, and then we can make that changes at renewal. Is this something you're okay with? So that way they at least know that, hey, I'm not saying you can't do it. There's a possibility you can. We'll just have to kind of find out, depending on the type of changes you want to make, if the carrier is going to allow us to. And that's where I get my service team, back office support to help out, because they could handle that situation a lot faster and a lot better than I can, as far as making the changes, things like that, because that's what they do. So I was just let me know if we got to get my service team involved. We definitely will, but here's what we just have to do. We change that renewal or we change midterm. So we kind of just leave it on their shoulders now to, whether they want to wait or, make that change sooner.
Okay. And then when it comes to renewal time a year later, which I can tell you, even buying our first house, it felt like I just went to sleep and renewal is already here, because that first year goes by so quickly. You're celebrating your house, you're enjoying, you're learning about home ownership, especially if you're a first-time home buyer. And all of a sudden you're here and you're like, what do you mean? I already did all that. Do I have to do it again? Do you help with reevaluating if the policy is still good? Obviously, what is it insured for? Things like maybe questions that your client had the first time around, how do you take a look at the renewal to be able to tell them if there's a change needed? Is this still the best thing? How do you kind of go about that?
So depending on how the policy got set up initially for, let's say, a closing, what I'll do, depending on how the conversation goes with them, I'll set like a task or an event for, usually 30 days out from the renewal the following year, just to kind of touch base. Hey, this is what we talked on. Are you still wanting to go this route, or are you okay keeping it where it is? But I'm not doing that for every client. Ultimately, just because working at the agency I work at, and helping out because my boss is out on maternity leave, and I've got to handle the entire book of business. It's harder to reevaluate my policies and then all of theirs at the same time. So what I'll tell people is, hey, you're going to get a renewal deck page usually about 30 to 60 days prior to that renewal, either via mail or email. Once you get it, policy will automatically renew unless for whatever reason you get a notice of non-renewal or cancellation from the carrier, which then at that point, I'll get involved and reevaluate, reshop. But I'll say, hey, you'll see what the new premium is. If you're okay with it, then policy will automatically renew. If your escrow mortgage company will pay for it, but maybe it's a $1,000 increase for whatever reason. The carrier just, had that type of rate revision. Well, then, I say, hey, just call me, text me, email me, let me know that you want to reshop. I'll ask you a couple quick questions just to verify some underwriting aspects, and then I'll reshop the market for you at that point. And, we're either switching you, or, that's just how the rates are for now with all the carriers in the area. So I kind of leave it up to the client, the insured, to say, hey, this $5 a month increase isn't a big deal. I'm just going to leave it alone. But also sometimes people just want to reshop every single year just to make sure, which, happens from time to time. I've got people that do that. So it's really going to be up to the client on, if they want to reshop or if they don't. And, the more I talk with our clients at our agency, the more I'm able to also understand, okay, well, this person wants a reshop year after year. So I'll save them the trouble of calling in every single time and just get it out of the way, let them know before they reach out to me what we're looking at or things like that. So it'll be different case by case, but I do leave it up to that client just to say, hey, let's do it, or no, hey, I'm good with it.
Yeah. Would you say that, especially with home values going up and down where they are, would you say that it's smart to take a look at it assuming that your premium wasn't something that triggered you to go, whoa, what happened?
Yeah.
Which does tend to happen here every time we have a storm. I feel like insurance companies, you're going to get hit the next time. But assuming that's not an issue, would you say it's smart to take a look at it every couple of years to make sure that your coverages are still adequate to what the market value is? Or, I don't know, the contents of your home has changed or something. Does it make sense to because I'm assuming that the insurance company didn't just raise the value of your home coverage because you've been living there for 5 years.
Mm-hmm. So, there's a lot of people that are very loyal to the carrier that just don't want to shop around. And, we have people who've been with the same carrier for 10 years. They just don't want to shop around. I know people who've been with State Farm, Allstate for, 20 plus years, just because, they like that company, and the premium might be good for them, and they just don't want to shop around. But ultimately, at the same time, I would say it's good over, a few years at a time to reevaluate, reshop, because you might be able to get something a lot cheaper with either the same, if not maybe better coverage. Mm-hmm. And so, that's a big factor into what I want to tell people as well is like, if I'm reshopping someone, oh wow, you've been with them since 2015. Yeah, it's definitely time, to take a look. It's just, how the rates are in the area and over the course of the years of renewing. So yeah, let's take a look at it just to, see if it makes sense. A lot of the times it is going to make sense because, the premiums are just increasing, but again, there might be something way better out there and a lot cheaper, which now the client's going to be that much more happier. But I mean, also even with a refinance, I know with refinances, you have to send over your current insurance deck page to that loan officer. But that loan officer, the reason you're refinancing, you're saving you're saving 1% on your interest rate. So that's going to save you quite a bit of money here and there on the mortgage payment. But also, if you reevaluate your home insurance at the same time, even if you've been with the carrier for a year, there's also a possibility to even tack on a couple more dollars of savings a month. So, with refinances, I always would say, if you want to reshop things like that, let's do it because you're saving money in one way. Let me see if I can save you more money this way as well. Now everyone's just happy, and it's just an overall great experience for that client, for that insured.
Okay, makes sense. I was going to ask you bundling. So, a lot of insurance companies or will mention bundling, auto insurance, home insurance. I don't know what other kind of insurance you can bundle, but bundling. Let's talk about that real quick. Because again, the question is, wait, hold on. I'm trying to insure this house that I'm going to buy. Why are we really talking about my car and complication, more to do? What would you say about bundling? How does that play into the insurance quote and all that?
So,
yes or no?
So ultimately, bundling can help as far as that multi-policy discount. Usually, depending on the carrier, the more policy you have with that same carrier, the likelihood that maybe the more policies will tack on, even if it's a small discount, it's still a discount. But let's just take home auto, for example. You'll get that multi-policy discount on the home side, helps on the mortgage, but you also get on the auto side because you have it within the same carrier. Even within the same agency, like through myself, we can do Safeco, Travelers. So it just helps utilize your overall package, your overall, your overall report or your insurance as to utilizing one carrier. So that way, if something does happen, okay, this is what I have, or this is who I have for XYZ, my motorcycle, my boats, all that stuff. But ultimately, the same thing is with bundling. Some carriers, if they write more than one policy, in order to get that bundle, you have to have another policy within that carrier. Like, let's say Safeco and Travelers, for example. If you do a Travelers home, Safeco auto, being that they both write, each other's policies, they all write the same. You're just unfortunately not getting that multi-policy discount because one's with Travelers, one with Safeco. But if you go through an independent agent, an insurance broker like myself, there are some home options that don't write auto insurance at all. They just strictly do home, but they give you a multi-policy discount for just having another policy or an auto policy, not with the same carrier, but with the same agent in the same agency that will help utilize the multi-policy on the home side. You may not, unfortunately, get it on the auto because, the home is elsewhere, but you can still bundle your auto with a home carrier that allows it and still receive that savings as if the two carriers were the same.
I like that a lot. I don't think that that's something we're quite aware of, about the fact that you can get a multi-policy discount even though it's not with the same carrier, just because you're working through an insurance broker. Because bundling seems to be such a not hot topic, but it gets pushed a lot. And I feel like sometimes you lose track of the fact that that carrier is giving you a discount, but ultimately is it cheaper? Assuming that the coverages are the same, like assuming that is equal, is it cheaper? So I'm giving you $50 off, just making this up, on $200. So now it's $150. When in fact, if you went and got it separately, it might cost you $120 without any discount. So you're like, okay, I got a discount on something higher. And a lot of times I feel like that gets pushed. And yes, it's a discount on that carrier's policy, but may not be a discount in a total sense if you got it through two separate entities. But that's a lot of work and a lot of deciphering what this, are we talking apples to apples? And I'm guessing that's, to me, that's where you come in a big way, because you can help me identify, is it apples to apples? Is it not? Does it make sense or not? And then, hey, maybe I can still get the discount just simply by putting it all through one and the same agent.
Yeah, and one thing I want to mention on that part is, outside of saving money on your actual monthly premium, so far all I know of is I've got one carrier actually that if you have multiple policies with them, they have what's called a single limit deductible, which basically means that, like, let's say, for your example, you've got this particular carrier, you've got all your vehicles, and you've got the home insured through them. Nasty hailstorm comes through, and let's say on your two vehicles, you've got a $500 comprehensive deductible, which is that's what you'd be subject to in a hail claim. Cars get damaged, roof gets damaged as well. Normally going two different carriers, or usually going two different carriers is probably the best example. You're going to be subject most likely to that wind hail deductible on the home, but also whatever that deductible is for those vehicles. So you might end up paying a few $1,000s because you've got all these deductibles adding up. Whereas through this one particular carrier that I write with, same example, cars get damaged. However, instead of being subject to both the comprehensive deductible on the vehicles and the wind hail, this carrier will actually only subject you to the wind hail deductible for everything, cars, and the roof itself. So you'll save on the monthly amount, but also you could save deductible wise if that carrier does allow that single limit deductible. So that's another huge benefit of bundling. That maybe not a whole lot of carriers offer that, but also if you go two separate routes, chances are you're definitely not going to get that benefit.
Yeah, and those are so many details that it would take a lot of time to call every single company that you can think of that you may. I mean, sometimes you don't think of certain companies to even call. Because maybe they're not as heavily in your face advertising and are not as top of mind, but they're really good. And it's great that you have that information. I can come ask you and go, okay. And I know that when I update my policy with you, I always ask that question, are they really good? Because, I'm not going to switch if they're not very good just because they're cheaper. I want to know if they're good. And you are, to me, that's been kind of a big benefit of having an agent who deals with all these different carriers and can say, no, this is, the feedback has been great about this company. So it's not just here's what you're going to get, because I feel like insurance is always that way. You don't really know how good it is until you actually need it and know how much paperwork is in and know how much was hidden in the language that you didn't quite understand. Like to the situation with your parents that you mentioned earlier, there's too much language that you just don't know, and until you deal with them. And it becomes, so to those clients that say they're very loyal, they probably have had a lot of good experiences, and it's very hard to beat good service, right? Especially when you are in a bad situation, something's happened to your home or to your cars or whatever. So to me, that's been one of the bigger non-tangible benefits, or more in the interaction with you that I can actually ask those other questions aside from what's on paper. That I couldn't do on my own.
Yeah, and it's funny, even though I don't write in Georgia, when my parents send me their policy, you know, I'll put it with my company, Goosehead, just to avoid that situation again. But I mean, it's just one of those, like, I don't even write in that state. So what I'm doing is I'm literally calling that underwriter in that state and like making and asking these questions to make sure that, you know, what my parents are getting, which ultimately I knew what they're getting, but I just also want a little bit better clarity as well to kind of relay back to my dad, who could be stubborn a little bit, but you know, that way he could hear from me also as to, yeah, no, this is great. You know, don't change anything. You know, they've got you fantastic. And so that's a huge benefit on taking the time to really take as long as not I need, but as long as you as the insured needs to be fully aware of what you're covered for, what you're not covered for, but also understand why you're paying XYZ amount a month. Because like you said, I mean, ultimately it's going to cost you if you're not really reading the entire policy jacket, which could be, you know, quite a bit of pages. And a lot of people don't have time for that. So that's where, you know, everything needs to be addressed up front as, you know, not the overall, hey, let's get you the cheapest, but hey, let's educate you because, you know, you're a teacher. You know, maybe you don't know. You're only seeing what's on paper. So that's why I want you to be aware of why, you know, we're going this route for you.
Yeah. Well, I think we are almost out of time. And I want to thank you for your time. I'm so excited I got my first guest with me.
Thank you for having me. It was fun.
I mean, like I said in the beginning, you and I have collaborated for several of my buyers, and they've come back and they've been happy with what they've heard. And along the way, you start realizing how much is involved in insuring. And why it's different and all that. And I thought, you know, let's dedicate some time since we're all stuck, sort of semi at home, you know, we're essentially stuck. Not exactly, but it's important to understand why these things happen, when they happen, and why they're important. It's not just the payout. It should the house go up in flames or the roof get hit by hail, which is definitely going to happen here in DFW at some point or another.
Likely.
Yeah, I've definitely learned a lot over the years of interacting with you of what to look for in home insurance, and I really appreciate that. So.
Well, I definitely appreciate you having me on here. So it's you know, it was fun. I had a good time with this.
Great.
So,
what if people want to ask you some questions or get an insurance quote, or let's do that plug. What's the best way to get a hold of you? And I'll type it into the comments as well, but just put your email or phone number, or what's the best way to get a hold of you?
We can do both because I'm a huge texter as well. Like if people don't get me, I mean the number that I've got, I always tell people, you know, call me, text me, email me. You know, it's gonna be a lot more convenient having that aspect. So the best number, you ready?
Yeah, I'm learning how to put that on. Oh look, there's a text on screen option. Let me see if I can figure that out. That'd be great. Tell me a number. I'm gonna test this out as we're talking.
Let's do it. 214-686-5054.
5054. And if it doesn't show up, then I will put it in the comments. Call Daniel.
Yeah, I was gonna say I could leave a comment if anything, if it doesn't pop up with a number and
with my little new technology play. It's my new toy. I'm learning. Hold on. Let's see if this shows up.
It's a lot better than the last 2 times we tried, so this is a lot easier.
It should show up in a minute. Is it going to show up? I'm very curious. I see it on my screen. gonna show up. I know it. I know that. There it is. Two 214-686-5054 for
Yes.
questions about home insurance or bundling or auto insurance. What other insurances do you do? Home and auto?
Any toys, anything that's not commercial, health, or life. So if you got an ATV, if you got a Polaris, if you got some boats and jet skis, I pretty much do all of that. Anything that you could have fun with, pretty much.
Okay, well that's fun. All right.
Yeah,
Well, thank
definitely
you.
want to make sure your assets are taken care of all the way.
Yes. Awesome. Well, thank you for your time, and thanks for being my my test subject on this first time to have a guest.
Yep.
And I'm sure we'll be talking very soon about one of my clients again.
Yes, man. Well, I definitely look forward to it. And if only we could do something outdoors on these beautiful days that we're having. But hey, I guess one day at a time.
All right. Thanks. Have a great day.
Yes, ma'am. You too. Talk to you later. Bye.